Yeah, I'm losing my
When a
edge.
winning streak snaps, what do you do? This is an interesting phenomenon in sports and everywhere else, whereby like a basketball team rips off like a 25 game win streak, and that's always fun, and it's everybody's riding high, and it becomes a little anxiety ridden by like the 10th or 15th game, and you're like, oh man, like now we can't lose. We have to keep this thing going. Or a pitcher throwing a no hitter. It's the same thing where it's like, don't talk to them about it. Don't bring it up. Just let it keep going. But what we don't talk about is when that streak snaps. And I wanted to bring it out of the sports world, into the trading world, and talk about how you got a good strategy going. We've had a couple good strategies going in the month of March as it comes to a close. And I want to zero in on one and talk about what to do when that win streak snaps. What do you think? Like, if you were riding high, you got 3 or 4 trades in a row, working in the small exchange futures, Mikey, and then you got one that's going against you. What's your first intuition there? And I hope it's not to necessarily freak out and close your laptop.
No, I don't think I would take that action. I would say though, if you are on a winning streak, hot hand, whatever it is, you had a few trades that worked for you. The thing not to do is to scale up and get way too big, where you get uncomfortable and the loss completely wipes it out. Hopefully, before you even hit that first loss, you've sized your strategy appropriately. So if things move against you, it's not detrimental. And you want to get back in the game as quick as you can. And hopefully you have a strategy that over time is in your favor, whether 51%, 60%, whatever you can get, that little bit of edge. And over time, law of large numbers, you'll accumulate that profit back.
Great point right off the bat. And we're not even touching on that today. We are going to talk about the small stocks and small tech futures and what's been just a beautiful run of pairs trades in the month of March here amid all the sector rotation. First, it was energy, and now it's industrials. Both those sectors beating up on tech, but tech continuing to bounce back every couple of hours, it seems. So creating a great pairs trading environment. And I want to talk about that win streak. But yeah, right off the bat, a great point that I didn't even put in today's presentation is the sizing up factor. Like, it's funny because it's the opposite of one of my favorite statistical theories, which is the double down on a game like roulette, where you have essentially a 50-50 bet between red and black. But of course, those greens that the casino put in there, they throw your odds actually a little bit lower without you necessarily notice it. And then they put a drink next to you, and then you really don't notice it. But anyways, you've got essentially a 50-50 bet. And the theory goes, if I bet $100 on black and then it comes up red, I lost my $100. But guess what? I can come back with a $200 bet on the same 50-50 chance there. And if I win that time, then guess what? I'm up $100. And if I lost that time, then I come back with $400. Then I come back with $800 until I finally hit. And no matter what, I should win $100. What you're talking about, Mikey, is like the exact opposite, which is like you won right off the bat for $100. And then the next one you size up to $200 with the chance that you lose. And now if I lose, guess what? I won 50% of the time. I won one of 2 of those rolls, but now I'm out $100. The worst thing you want to do amid a hot streak is start to size up. Consistency is king amid the hot streak itself. But I do want to talk about the fact that we've had a couple good opportunities for stock pairs. And I'm just highlighting some very broad high level ones here in 2021. But Pete and I have been throwing this SM75 sticks pair on as often as I think we probably did it 2 or 3 times this week. If you've been trading it on an intraday basis, you've had several chances at selling SM75, buying sticks, and then covering that pair for a $50 winner a couple of times this week. But either way, this is all just to say we have sector rotation occurring in the stock market. We have a pairs trade opportunity that's reverted back a few times if you've jumped on the short SM75 long sticks trade, which is the short energy and industrials long technology trade. But what happens if this rinse and repeat trade doesn't revert? Do I take $50, $50, $50, and then it goes through me for $50? Do I shut my laptop and just hope that everything is good come Monday, or where do you think that we go with this, given the fact that I already alluded to consistency and mechanics, Mikey?
Yeah, that's exactly right. You got to fall back on your guns and maintain your mechanics and stay consistent. And I think before you even put the trade on, you should feel comfortable knowing that the thing can swing either way for you or against you. I mean, look at just the range here that you've plotted down from -4 all the way up to 10.
Yeah.
I mean, it's anybody's guess where it's going to go. But I would say whether you're managing your profits or you're managing your losses, keep it tight and stay consistent. Follow the mechanics and refer to the standard deviations if you need some range there in some context.
Yeah, absolutely. Because this is what you want at the end of the day is you want a 50-50 trade in theory that you're on the right side of.
Mm-hmm.
Like here's just like 3 occurrences and you're 2 for 3, which is awesome. 66% is like literally like batting over 300 in baseball. Like that's all-star level in futures is 66%. But even that being said, Mikey, if I, really dug in here and went to like a 5-minute chart and showed you a bunch of different occurrences of selling this spread and buying it back as it's reverted several times in the last couple of weeks, and you were 6 of 10, or 11 of 20 or whatever it is, as long as you're consistent with these mechanics, you've got yourself an overall profit. And at worst, that 50-50 probability is working out and you hopefully get to a scratch. Now, of course, where you get the short end of the stick is if you're on the wrong side of whatever strategy it is, a pairs trade or an intraday scalp or an options trade or what have you. If you're on the wrong side of it and your success rate is more like 20 or 30%, then yeah, taking $100 and losing $100 on every win and loss is not going to pan out. But as long as you're north of 50%, then that's going to be enough to get that bottom line in the green there. And at worst, say you don't go on a winning streak, say you just shop around and you're just 50%, you're at very least at a scratch.